Hi everybody, it's AJ speaking. It's Monday, 4th of August. It's right before market open. Just want to give you a quick update on Tesla. The biggest news item is the board awarding Elon 29 billion in Tesla stock. The stock is up 2.5%, trades at $310 right now in an overall positive market and just slightly above the beta implied. Unless we get more positive news, I don't think this level will hold. We also got China July production, which wasn't too great, but the market apparently isn't ignoring this for now. So my base case is that as we approach a week midpoint, we will lose all gains. But again, it depends whether we get more positive news flow. Last week was the week after the 2Q earnings call. There was no material news except for Monday when Tesla signed a 16.5 billion chip supply deal with Samsung. This was for AI6 hardware, but this is probably too far out for some material near-term impact. And for that reason, later in the week, stock then sold off, as there was also no support from the market. Market was most of last week sideways, as you can see here in these trading ranges. This is the S&P 500, was from Monday through Thursday pretty much sideways, slightly down. Even though earnings came in across the board quite strong, we are right now in reporting season for the tech sector. This is the Nasdaq index right here, similar. However, then on Friday there was bad news. The jobs report came in significantly below expectation, but even I think more importantly, the numbers for June and May were revised down significantly by about 90%. So all the euphoria that actually drove in May and June positivity in the market about strong jobs market was all based on deeply flawed data effectively. So a lot of people in the market got quite pissed because of that, including myself. And then we saw this sell-off, so tech down, S&P down, and given Tesla's beta, Tesla only down 1.8%, actually not that bad. But you can see here on the amount traded, 28 billion on Tuesday, 27, Wednesday, 27, Thursday, Friday. All this wasn't built on much volume. And as I said many times before, whenever you see a move, whether it's up or down on low volume, it doesn't mean all that much. Because ultimately, keep basics in mind, the share price is always the value of the last share traded, even if it was only one share. Of course, Tesla has a huge trading volume, so that's never the case, but the point being, if you see days of low trading volume, you always need to be worried whether this is really a trend or this is just, as so often, just traders' algorithms doing their thing, pumping and dumping the stock. So this then left last week down 4.2%. This chart then shows you the weekly share price change in the stock, starting at a share price of 389 at the beginning of December last year. So we can see down here, so the most recent week was down $13. This comes after $14 down the prior week. So, and you can see in this chart, so the first time we crossed this current level was at the end of February. Then we had this trough, amazing buying opportunity. Stock recovered, and then end of June, or early June, sorry, we lost those gains and dropped below the current level, traded up a little bit, and then for the last couple of weeks, mostly sideways. And keep in mind, there were various significant news items in that time period. There was the second Elon Trump feud. We had the robotaxi, the ride-hailing launch, which in the community was widely celebrated, and rightfully so, as a huge milestone in Tesla's history. But the bottom line is that the people who bought into the story, they long bought the stock. They don't have much dry powder left, so that's why they don't move the share price at all. So it's left to people who are not fully on board, who trade the stock. And that segment of investors was quite lukewarm on the ride-hailing rollout, because a big part, I think, is it's still under supervision. And that's why I think we need to lose the supervision before the ride-hailing network creates more sentiment in the stock. And I think a super large rollout under human supervision is not viable. So I expect sort of a more significant expansion and then a slowdown, unless we see removal of the monitors, of course. And then we'll see an acceleration. So let's take a quick look at volume. As I said before, volume is a bit low by Tesla standards. By standards of pretty much every other stock, it would be quite large. But if we look at this chart, the blue line is the trading value in billions of dollars. And then you see the share price. This is updated for last closing price, so close of Friday. So this is just under $303. And we can see that that trading value in Tesla was, let's call it around the 20 billion, 25 billion mark, sometimes even below 15 billion before the Trump victory in November. And then we saw a significant step change in overall volume in terms of dollar traded after the election. And that continued on until we saw a significant drop-off in December, which is normal because a lot of traders go on holidays, etc. And then as people came back from vacation, etc., and news events hit in the first quarter, there was a significant spike in trading value. But then in recent weeks, it calmed down, except of course around the 2Q earnings call. And now I zoomed into the last 3 months. We are above the 1-year median, but that's because, as you just saw before the Trump victory, there was a significantly general lower level of trading. But based on this step change that I just mentioned, relative to that one, we are sort of the value is coming down, and the trading value is always an indicator of interest. In general, as a long-term holder, you like to see a high interest in a stock. So before we finish, just real quick on this Elon 29 billion TSLA award, Tesla stock award. Personally, I think it's unfortunately a nothing burger. It doesn't really change the control situation right now. I mean, Elon talked about this many times. It's not about getting more money from Tesla. It's about getting more control. But this stock award, as I understand it right now, as it's structured based on the post Tesla put out on X, my understanding is this does not do very much on its own. Much more important is that Elon gets reinstated the 2018 deal. That is the big fish. That's the one you should focus on. And this is being decided by the court in Delaware. I mean, thus far I haven't seen a reaction from Elon, and we might never get a direct reaction from him on this. But my view is this is not doing very much. And I think that the posts I've already seen on X where people talk about, oh, this removes overhang from a stock, I think, frankly, it's quite BS, because it doesn't change meaningfully the underlying problem, which is that Elon feels he has not enough control. He can be ousted if a bunch of big investors would team up against him. And because he was already kicked out of companies that he founded more than twice, it's understandable he wants to make sure that it doesn't happen a third time in Tesla. But big picture is, my fundamental view is Tesla is Elon's baby. And from a negotiations perspective, he of course always has to maintain the aura, or the aura of the threat of leaving, should he not get enough control. But I don't think Elon would ever chicken out of Tesla, because Elon is not the type of guy who just admits defeat and rolls over. And that's why I think he's extremely intelligent. He would find other ways to secure control. And there are various venues that he could explore beyond the frequently but extremely difficult to implement different share classes. But that's a topic for a different video. With that, thanks for listening. See you in the next one. Bye.